Maverick traders, welcome out to your market roundup for February 3rd. Corey here with you. We're going to take you through meaningful news. Certainly, stocks gapped down sharply. Futures were weak over the weekend on the tariff news. We'll touch on that. We'll talk about sector analysis and the best bullish, sideways, or bearish ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we dig into today, I guess you'd kind of need to look back to last night. Last night, the futures were showing a big gap down in the markets. We knew it was going to come in a little ugly as tariffs have been rolled out amongst some of our biggest trade partners, Mexico, Canada, and so forth. And so the market stumbled out of the gates down 1 to 2% in most markets. Looked pretty ugly early on. We actually did get a little bit of a bounce back from the open. Dow only finished down 0.25%. S&P down just shy of 1. NASDAQ, Russell down just over 1%. Oil and gold, the commodity trade, pretty strong today. So the news was all about the tariffs. Certainly, what's going to happen. Now it's suggested that the Mexico rollout is going to be delayed a month. So the tariffs are still anticipated, but they won't begin for another month. And there could be a lot of things like that coming just day after day. So be prepared for that. But if you look at the technicals, we got lower swing highs, lower swing lows. We are in a little bit of a weaker environment. It's sideways, but a little bit weaker than not. Advanced decline line, about 3/4 of stocks falling today. And the 50-period moving average a little bit more bearish, where 60% of stocks essentially are now in a downward trend. So here's the S&P. You'd call this a neutral looking chart, no doubt, but it is worth noting, look at the prior swing low, look at where we just pierced. We are in the zigzag pattern to the downside. You can also see the 20s below the 50. Now they're both sloping sideways, but again, we've got more probability of going this way than not. And look, I said this, I did 2 market roundups last week. I did a market roundup the week before. And I said the most probable is more of a sideways. The second most probable is a downward move. And the least likely is a big move to new highs. That's my opinion. That's the way I see it. I still expect that. Don't look at this as a bullish candle. This is not a bullish candle. Did we rally from the open to the close? Yeah, we still finished down 1%. We still made a lower daily high, a lower daily low. Could you bounce a little bit? Sure. But just like the prior bounce after a big gap down, we went to new lows. Even if we bounce for a couple of days, I think new lows are still coming. I've been on record as saying that certainly today's price action doesn't change that. Look at the NASDAQ. What are we doing? We're sideways, but again, sideways might be most probable. No question in my mind, the bearish move is second most likely. So that's how I'm trading this market, is sideways to bearish. I just think the least likely outcome is up here. So sometimes in trading, it's not about which direction it is going, it's which direction will it not go. And that I feel pretty confident about, have felt pretty confident about, and it seems to be working. Russell 2000, same thing. You've been propelled at resistance, you're pushing lower. Do we chop around a little? Sure, but I still suspect there's lower prices to where we're at coming up. So as you look at the price action, certainly Nvidia, Apples of the world got hammered. There was some strength in the core consumer defensive stocks, Walmart, Costco, Procter & Gamble. And then it's kind of spread out. Some green, some red, certainly red in industrials, red in the consumer cyclicals, red in some of these financial names. Now, as we look at possible trades, I'm going to keep it very technical in terms of individual stock trades. What appeals to me? Well, remember what was up today were gold, silver, copper, oil, the commodity space. And you can see that Agnico Eagle Mines, which is a gold miner, broke out a couple of weeks ago. Even on a down day like today, it still made a higher daily high. So, will we chop around here and create a little high base? Yeah, probably, maybe a little pullback. But this is a stock you want to look for bullish opportunities. One that's ready to pull the trigger right now, I think, is Snowflake. Now, you do have to be careful because of earnings season, and it's going to report earnings. However, this is one of my favorite patterns, and when it happens and it looks this nice, I usually take a trade. In Snowflake, I have a bullish position. This is called the cup and handle pattern. It is right down at the handle, which is exactly where I like to buy. The risk to reward of buying in the handle is fantastic. Now, your probability of success is still not great. Maybe it's really good at 60-40, that you get it right 6 times, you get it wrong 4. It's not 90% probability or anything crazy high. But how does the cup and handle work? Well, the handle is just 30% of the size of the cup, and the cup has already been formed. So you just do some back of the envelope math. Resistance is up here around 188. The bottom of the cup is down here at about, we'll call it 153. The difference between those two prices, if again, and this is not an exact science, let me be clear. I'm just sort of eyeballing it and saying, okay, about 188 resistance, about 153 support. That is a 35-point range. That's the cup, right? The handle should be about 30% of the size of the cup. So what's 30% of 35? Well, 35 times 0.3 is $10.50. So when you pull back from 188, you should go about $10.50 lower to about 177.50, and that should be the bottom of the handle, right? So a cup and handle just looks like this pattern. And it's so good because psychologically you have a well-established resistance. Remember, it's forming right here. This is where we're at, is at that point right there. You have resistance, which is obvious, where it repelled the stock. You have the successful retest, which is obvious. So you don't need, the pattern draws itself, right? Resistance, the successful retest of resistance, and then when it backs up, when it comes back 30% of the size of the cup, which in this case is around 177.50, sign me up. Because if it goes to this resistance a third time, and that's exactly what I think, is that it's going to work its way up to 188 again, and this time break through. How high might it go on the breakthrough? That is a very good question, but significantly higher. One could even take the size of this handle, which we already know is $10.50 roughly, right? And that's 30% of that. And you could say, well, it should go about 10.50 above, so that would put us at about 198.50 as an upside target, up there near $200 per share. If you're getting in at 177.50 and it runs up near $200 per share, you're going to make some nice money on a bullish position. So these type of cup and handles, again, where do you spot them? It's really once the resistance is retested. This is where you can see the cup is fully formed, and I just get prepped to buy in that handle. I do the back of the envelope math, figure out how far the pullback should be. When it gets to that point, unless something looks really off, I'm ready to pull the trigger, and away we go. So Snowflake on the bullish list. On the bearish list, Biogen, pretty simple, just downward trending. Nothing too major here. It just made a lower swing high than the prior high. It's probably on the cusp of making a lower swing low than the prior swing low. So, down there in the 130s, mid 130s seems likely. Last but not least, FedEx. Here again, just a nice pattern. You had a basing formation that has been broken, and it broke today on volume. Bearish candidate, look for opportunities to trade FedEx further to the downside. So my outlook really hasn't changed. I'd call it bearish to neutral. And that means that's my general focus. I don't think the bullish move is likely. So I want to be skewed in this direction in my trades. We've got non-farm payrolls out on Friday, and then we're right in earnings season. So you've got AMD, Amazon, Alibaba, Conoco, Disney, Google, Qualcomm, Uber, plenty of companies, lots of activity this week. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.